Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of business. Today we're diving into a report that might have you saying, wait, did they just give away their company with IOUs? Let's get to it. We are taking a look at a report filed on February 19th, 2025 by TECOGEN INC, a company with the stock ticker TGN. This is basically a snapshot of some important happenings for the company around that time. This report is called a Form 8K, which is like an alert system for investors. Companies use it to quickly share big news or changes that could affect their stock. So what's the big deal with TECOGEN? Well, it involves some debt, a key insider, and the potential for that debt to turn into a big chunk of company stock. The interesting part is under Item 8.01, Other Events. This section tells us about something significant that happened. In this case, it's about an amendment or change to some existing agreements about money the company owes. On February 18th, 2025, TECOGEN made a change to agreements involving money it owes to John N. Hatsopoulos. He is a lead director and a shareholder, meaning he's a big player in the company. The company had already borrowed money from Mr. Hatsopoulos through something called promissory notes. Think of these as IOUs, formal promises to repay a debt. There were two of these notes, each for $500,000. So TECOGEN owed him a total of $1 million. One note was from October 2023 and had been updated once in March 2024. The other was created in July 2024. Now, here's where it gets interesting. TECOGEN and Mr. Hatsopoulos agreed to change the terms of these IOUs with an amendment. The biggest change is that they pushed back the date when TECOGEN has to pay back the money. It was extended to July 31st, 2026, giving the company more time. But there's another twist. The amendment now allows Mr. Hatsopoulos to choose how he wants to be repaid. He can either get paid back in cash, like a normal loan, or he can choose to receive common stock of the company. This part is key. If Mr. Hatsopoulos wants, he can convert the debt, the money TECOGEN owes him, into shares of the company. This is called a debt to equity conversion. The number of shares he would get depends on the stock price at the time of conversion. They'll calculate it by dividing the amount of debt, including any interest owed, by the average stock price over the 30 days before the conversion. If you want the full legal details, you can check out the actual amendment document labeled as Exhibit 99.1 in this report. So what does this all mean? TECOGEN, a company that needed money, borrowed $1 million from a lead director. The terms of that loan were changed to give the lender, Mr. Hatsopoulos, the option to become a major shareholder instead of getting paid back in cash. Now let's analyze this situation. TECOGEN's direction. This move can be seen in a couple of ways. It shows TECOGEN might be having trouble generating enough cash to pay back its debts, so it's offering stock as an alternative. On the other hand, it could mean Mr. Hatsopoulos has a lot of faith in the company's future and wants to increase his stake. Risks and opportunities. The risk for existing shareholders is that if Mr. Hatsopoulos converts his debt to stock, it will dilute the ownership of everyone else. This means each existing share will represent a smaller piece of the company. The opportunity is that if TECOGEN does well, having a committed major shareholder like Mr. Hatsopoulos could be a positive thing. Stock price outlook without getting too deep into the financials. Let's say TECOGEN stock is currently trading at around $2 per share. If Mr. Hatsopoulos chooses to convert his $1 million debt into stock at that price, he would get 500,000 shares. Depending on how many shares are currently outstanding, this could represent a significant portion of the company. Valuation. Valuing TECOGEN requires a deeper dive into their financial statements, their growth prospects, and the industry they operate in. But based on this single event, it's hard to make a definitive call. Conclusion. Overall, I'm leaning slightly bearish on TECOGEN right now. The debt conversion adds uncertainty and potential dilution for existing shareholders. Price range recommendation. I think a fair price range would be around $1.50 to $1.75. That's it for this episode of Corporate Decoder. If you found this breakdown helpful, please subscribe, like, and comment below. Let me know what other filings you'd like me to decode. Thanks for watching.